All right, let's jump right in. Today, we're decoding some of the most powerful forces moving the markets. We're going to look at the absolute explosion in AI and what that means for stocks, and then we'll pivot to some really critical signals that are flashing in precious metals and, of course, crypto. Let's do it. Look, our whole goal here is to cut through all the noise. We want to give you a clear, simple roadmap to the key trends that are shaping the markets and your investments, connecting those big picture stories to the charts you're seeing every single day. So this is the big one, right? The question that's on every single investor's mind. You see these sky-high valuations, you hear all the hype, and you kind of get that feeling of déjà vu. It's natural. Are we just riding another wave of pure speculation that's just doomed to crash? Well, we're about to unpack that right now. Okay, so first up, artificial intelligence. You really can't understand what's happening in the market today without getting a grip on the fundamental story that's driving the entire tech sector. And the argument here is simple. This isn't just hype. It's a genuine, massive technological revolution that's already happening all around us. And this is where it gets really fascinating. The dot-com bubble, let's be honest, was fueled by companies with little more than a website and a prayer. It was pure speculation on an idea. Today's AI leaders, on the other hand, are built on decades of serious, peer-reviewed scientific research, and they're delivering real products that are growing more powerful at an exponential rate right now. It's a world of difference. I mean, if you want a perfect recent example of a pure hype bubble, just look at NFTs, a market driven almost entirely by celebrity hype and speculation, and it saw a mind-blowing 97% collapse in value. This just slams home the crucial difference between a trend built on hype and one built on real foundational science. So here's the key takeaway. AI's real value isn't just about generating cool images or funny videos. It is a tool for fundamental, world-changing discovery. I mean, think about this. Google's DeepMind created something called AlphaFold, and it solved a 50-year-old challenge in biology, protein folding. This was so profound it contributed to a Nobel Prize. And that's just the beginning. AI is now being aimed at, well, everything, from fighting Parkinson's and plastic pollution to designing the next generation of computer chips. And that quote right there just nails it, doesn't it? This is exactly why the old ways of valuing companies are kind of breaking down here. How do you possibly put a price on the potential to cure a disease or solve an energy crisis? You're not valuing a predictable cement company. You're trying to value a science lab that's on the verge of discoveries we can't even imagine yet. The potential isn't just linear, it's exponential. Okay, so we've got this huge, powerful, long-term story with AI as the backdrop. Now, let's switch gears and zoom in on the here and now for U.S. stocks. Because, you know what? We're starting to see some very, very encouraging signs. Just take a look at this. Across the board, key parts of the market are flashing bullish signals. The S&P 500 and the tech-heavy Nasdaq 100 are both showing 5 positive divergences. Now, if you're not a big chart watcher, all that really means is that even if prices have been kind of flat, the underlying momentum is quietly building up steam for a potential rally. And it's not just big tech. Even the Russell 2000, which is all about smaller companies, is showing that same kind of broad strength. So, on one hand, you've got stocks looking pretty strong. But on the other hand, an asset class that has been on an absolute tear, well, it might be hitting the brakes. And I'm talking about precious metals. With gold, we're seeing pretty much the mirror image of what we just saw in stocks. We've got 3 negative divergences, which is basically a warning flare that we might be seeing a short-term top. Now, this doesn't mean the big run is over, but it does strongly suggest we could be in for a pullback or just a sideways consolidation period for the next 2 or 3 months. The key support level to keep an eye on is right around that $2,370 mark. It's also just a good reminder that while gold has been hot lately, over the last 30 years, tech stocks have delivered much, much higher returns. All right, last stop, crypto. This is easily the most volatile corner of the market. And right now, the word is definitely caution. The situation for crypto is just fundamentally different, and it carries a really unique set of risks. And this quote, wow, it really gets to the heart of the issue. Think about it. AI has buy-in from pretty much everyone, governments, huge corporations, but crypto, it has some very serious and powerful enemies in global finance. And that external pressure creates a level of uncertainty that just doesn't exist for mainstream tech. And you can see that uncertainty right here in the charts. The total crypto market cap has actually flipped to a sell signal. It's now testing a really, really critical support zone. If we break below that zone between 2.54 and 2.75 trillion, we could be in for a much bigger correction. Bitcoin is pulling back, and the altcoins are just struggling to find any momentum at all. This looks like a time for defense, not offense. Okay, that was a lot to cover. So let's pull all of these different threads together and give you one simple, clear snapshot of the market. So here's the final picture. First, AI and tech stocks look fundamentally solid, with a really strong long-term outlook thanks to real science. Second, in the short term, U.S. stock indices are flashing bullish signals that point to a potential rally. Third, precious metals look like they're ready to take a breather and consolidate for a bit. And finally, in the crypto market, it's all about high risk and caution. Those key support levels absolutely have to hold. So the big question is, will the solid foundation of AI be enough to lift the whole market? Or will the risks in these other areas create some broader headwinds? Thanks so much for joining us. If you found this breakdown valuable, a subscription and a like are always appreciated.